Welcome, everybody, to our special series here with our lovely April, our accountant partner with Accountwell and Co. This is going to be series number 2 with our accounting series. And today on Mortgage Insiders Recording, we're going to be talking all about new home buying rights and special programs that are available. I know a lot of this is related to taxes, so that's why April, we want you to shed your light and wisdom on this. I guess starting off, like when anyone is looking to buy their first home, just know that there are incentives and a lot of programs that are applicable and available to you, right? Whether or not you know it, it is definitely there. It's not widely, I feel like it's for some weird reason, it's not really general public knowledge. Like it's not really advertised heavily unless you actually work with a professional. So, really, today we want to dive into all those special rights and programs that may be applicable to you. Preet, why don't you take it away? What kind of programs do we have on the table here for those who are a first-time home buyer?
Absolutely. Welcome again, April, to our Mortgage Insiders edition. And today we are going to discuss, as Kim mentioned, the different incentives offered by federal and provincial governments. For this video, we will only concentrate on the federal incentives. And naming a few, RRSP home buyers plan is one of them. And then the first time home buyers tax credit is the second one, which is the most popular one. The third one that always comes up in the discussion, especially in markets like Edmonton and Calgary, is the first time homebuyers incentive program, which is the most recent one, but that's also the most controversial one also. So April, starting with the ROSP homebuyers plan, our listeners and viewers would like to know more about, would you recommend using that RRSP home buyers plan? And if you could kindly share how basically they can borrow or they can use that money and they can pay that money off back to the government.
For sure. So in short, the first-time homebuyer plan is a mechanism where you can pull money out of your RSP account on a tax-free basis and use it towards the down payment of a qualifying home.
Yeah.
So if you're looking to, purchase a home in X amount of years, and you want to have 70,000, you're buying it with a spouse, and you want to have $70,000 put down on the home. Over the period leading up to when you buy it, you can contribute, each of you, up to $35,000 to your RSP, and then withdraw that without, no strings attached besides having to repay it, of course, and use that to purchase the home. So you can, put up quite a sizable down payment for that first home, and all the while leading up to it, contribute to our RSPs. So you're generating a tax refund in that process, which further, grows the size of that down payment because you have those tax savings at least, along the way. So it's a great program. It's universal. Everyone can access it. Before March 2019, you could only pull about 25,000, but post March 2019, it was bumped up to 35. So again, huge, overhaul to the program, which was really beneficial for people buying homes recently.
Makes sense.
I think like one question I do have on that is I have clients say, okay, Kim, if I want to participate in this program, what happens if I don't pay back? What is the tax consequence?
Yeah, so what's nice I kind of touched on before is that it is interest free. It's money that comes out, and then you have 15 years to repay it back, equal payments. So using that $35,000 example for an individual, that comes out to about $2,300 per year. And ideally, you pay it back, you contribute to your RSPs, and then your accountant or tax professional will just allocate that on your tax return as a repayment. So nothing fancy, the individual has to do, just make sure you repay it back through your institution. But if you don't pay it back, that, in the example of the 2,300, gets added to your income and then taxed. So say, for example, you withdraw the RSP and you're, you withdraw the home buyer amount and you're in the second tax bracket. But then a couple years later, you're earning more money and now you're in the third tax bracket, and that 2,300 gets added to your income. You could actually be paying more tax on that than when it originally went in. So it is important to keep an eye on, if you're not repaying it, that does get added to income. And if you're in the third tax bracket, that would be about $700 in tax that you would owe on that. So it's not something that's really light to just pass over.
Makes sense. And yeah. That's a very valid point, because the repayment always, that's other topic that always comes up when we are discussing the home buyers plan with our clients. You mentioned briefly about that. So when they basically repay it to their bank every
Yeah.
year, let's say in the same example, $2,300, and the receipt is generated. So they would have to tell their accountant that this is a repayment, or is it already like pre-programmed as a repayment?
Yeah, so the CRA did a massive kind of technological overhaul in the last 5 years or so. And a lot of that information now for tax preparers can be automatically downloaded into the software that the return is being filed on. So before, I'll say back in the Wild Wild West, people would have to communicate that to their accountant. They would have to give their prior year notice of assessment that has that information and that those schedules. But now when the tax return is prepared, it's automatically imported. The information from CRA goes into the software, and oftentimes it's just right in there automatically. The accountant can sometimes confirm, do you want to designate the repayment? 99.99% of the time, the answer is yes. But there's a lot more check and balance now with that kind of reporting.
That's
Oh,
good
that's
to know.
lovely. Yeah, that's
Yeah.
much better. So like,
Yeah, kudos to your
yeah, kudos to CRA. No, that's awesome. So
Yeah.
like if when someone's paying it back, like do they have to do that 2,300? Could they do a little bit less and then more the following year? Or like how does that actually work?
That's a good question. Yeah. So the schedule is dictated by CRA, and it's 15 equal payments. So I've never seen a situation that was any different, but unfortunately, it's not elective. It is set how much you have to repay each year, and there is a grace period of 1 year from the time you take out the, say, in the example, 35,000. You start repaying back the year afterwards, and CRA will have that information on your notice of assessment that says what year you have to start repaying, the amount you have to repay, the year that it'll be done. So all that information is tracked by CRA through either your CRA My Account or on your notice of assessment.
Oh, awesome, awesome. Thank you for that.
So they can prepay more, or they cannot prepay more. Let's say if they want to pay 4,600 this year, can they do that? No.
So you technically can.
Okay.
I wouldn't necessarily advise that because there would be other kind of uses of that fund that you could use because it is an interest-free loan.
Yeah.
The funds might be better earmarked for either topping into your TFSA if you have room, maybe using it for something else. So even though you can, we don't quite often see people adding extra, although I'm sure the government would appreciate it. There's probably other uses of or more efficient uses of the funds. Yeah.
Yeah. No, I agree with that approach. Putting that money in a TFSA is a very good sound advice. Yeah. I really agree with that.
I
Yeah.
agree. Yeah. Okay, okay. So I think like yeah, so we talked about like the first time home buyers RSP program. I think the second thing that we hear is, that first time home buyers tax rebate, right? I think they get a tax credit. So I think as of today's date, we're looking at 5,000 tax credit that every Canadian would get. Is that correct?
Yeah, and I love this program so much because I feel like a lot of people, it's like an afterthought for them because the homebuyer program with the RSPs gets so much attention. It's really the superstar of the menu of benefits when you're buying your first home. But because the first-time homebuyer tax credit doesn't happen when you buy it, it happens in the year
After.
for that tax return.
Yeah.
It makes us accountants look great because we file their return and we're like, oh yeah, you also get this extra $750. So we love it. It's always good news for the client. And it's always a little bit down the road, right? So that people kind of forgot about it. But the whole purpose of it is to help first-time home buyers offset the kind of acquisition costs of that home. So like the lawyer fees, inspection fees, extra accounting fees, whatever that looks like. And you're right, yeah. So 5,000 credits, which translate to about $750. Well, exactly $750. And there are kind of rumblings that could up to double with the recent kind of legislative rumors. So that's always good.
Yeah. Absolutely.
That's awesome. And like, so one question I have is, again, this stuff comes up all the time where clients will be like, "Oh my gosh, what if I forgot?" Like, I've had clients come back 3 years later and they're like, "Hey, Kim, like, I think I forgot to tell my accountant about this tax credit." And again, some accountants don't even ask, right? Or there's some of my clients that they'll they'll do it themselves. Like they like to
Yeah.
tax themselves. And I'm like, okay, well, guys, number one, this is why you shouldn't do things on your own. You'll forget things like this. But if, let's say, somebody forgot to claim it, is there a way to kind of go back and claim that in future years, or is it kind of like you snooze, you lose kind of deal?
Yeah, that's a great point. Because a lot of times as accountants, that's not something that automatically, because the CRA has no idea whether you bought a first home or not. It's something you, like a button you have to press. But for us accountants, we'll see if you withdrew through the home buyer plan, because you'll receive a tax slip called a T4 RSP, and we'll see a value in that box for home buyer withdrawal. So we'll know that there was a first time or a first home, like an eligible property that was purchased. So it's like a kind of a trigger for us accountants to make sure you ask, are you eligible for these tax credits as well? So I can see how people would miss it if they're not working with a professional or know about it or know where to even find it on what schedule. But again, with this revolution of CRA, they've made it very easy to ask for those later. So there's, even through your CRA My account, or your accountant through their Represent a Client portal, can go in and just request a change to the return and ask for those credits later. So luckily, it's not snooze, you lose. They've made it flexible that you can always get it later. It just requires an adjustment to your return, which you can file online.
Makes sense. Yeah,
Awesome.
this program, as you said earlier, this program, the tax credit is very less known in any kind of demographics, right? So I did a video on this one, and there were so many questions that came up, and I'm glad I am more, I think, now knowledgeable on this program after learning more from you. Yeah. So moving further, the last one on the list today, incentive wise, is the first time home buyer incentive program. So personally, for me, this has been a very good product, I would say, from Government of Canada. It has helped a couple, like more than 5 or 6 clients for me, where they were becoming homeowner only because of this program. What would you like to say to our listeners and viewers, that how would you recommend this program? And there were some other questions that always come up, is that do the clients have to pay taxes on this or any claims? So if you could elaborate, would really appreciate it.
I think
Yeah,
or maybe what we'll do first is let's explain to the viewers what it is, right? So
Yeah, sure.
the first time home buyers incentive program, for those of you listening who may not be aware of it, it's a program where if you are planning to buy a home in Canada, if you're buying like a resale home, the government will they'll match your down payment up to 5%, right? If you're buying a resale home. If you're buying a new build, they can give you up to 10%. So essentially, the program of this is for affordability, because the government's giving you an interest-free loan that gets applied to your down payment. The long story short of it is that your mortgage becomes smaller, which becomes a little bit more affordable. So that's kind of the catch. Now, there's no such thing as a free lunch, so you will have to pay this back eventually. And the catch to that is, when you do sell your home, essentially you need to pay, if the market value has gone up, you would need to give them a certain percentage of that, and vice versa. If it goes down, then it is capped. But yeah, I think I guess, April, like, your thoughts on this program, and also, does it even have any type of tax implications? Is this something that, do you guys face that in the accounting world?
Yeah, and I will say it's funny you're coming about a free lunch, because I think the first time homebuyer tax credit is probably the closest thing we'll get to a free lunch from CRA. It's probably the easiest kind of rebate funds handout. I don't want to call it handout, but like credit we'll get from the government. So absolutely don't forget that one. It's the easiest program. Whereas on the flip side, this first time homebuyer incentive, and I'm sure you guys have seen on the back end, there's a lot of little moving pieces to this. There's a lot of things to kind of consider in regards to like the eligibility. I, just from my opinion, find it's quite targeted as far as the eligibility around, household income, the price of the property. So I don't see a ton of it. I think it's more so kind of on your guys' side, but I can confirm we probably don't see a ton of it, because there's nothing from the program that gets reported on your tax return. So it really is just kind of on the side. The only major time I can see us getting involved in sort of this program specifically would be around planning if you're going to make a big improvement to the property and it's going to increase the value before you sell it, and how much that could impact how much of the new gain you have to hand off to the government upon the sale. Because that's always something to consider, is how much value is increasing to the property over the time that you're there. But yes, nothing you have to report on your tax return. Nothing is taxable, assuming it's primary residence, which is the whole purpose of the program. So hopefully that can put some of your viewers at ease with some of the questions they're kind of firing off to you guys.
Totally, because we hear that a lot, right, Preet? Like I hear from my clients, like, "Oh, Kim, like if I have a lot of gains, like, do I have to
Yeah.
pay taxes on this?" But I believe, like I said, April, you can reconfirm again too. If you're buying your primary residence, if you sell it, there is no, at this moment in time, anyways,
At
there's
this moment in time, yeah, we know politics, right? So.
yeah, exactly. So, do you think that's going to change anywhere in the future then? Like, any final thoughts on that and first-time home buyer programs? What are your 2 cents on that?
I feel like as accountants and tax lawyers, like, love to speculate over potential changes. Like, it's kind of, the way that we gossip. And, people have been talking for many years now about potential changes to the capital gain inclusion rate, whether, because Canada is pretty lucrative, the fact we only have to pay 50% on our gains. So, but I just fear that changing the rules around capital gains in your primary residence would be so unsavory among everyone. So I don't know if that'll ever change. It would be very interesting if it did. But I think as a first-time home buyer, again, talking to your professional to know what incentives and rebates and programs are all out there, because there are a lot. And we didn't even talk about the land transfer tax, which is really the land transfer tax rebates, which is really geared towards provincial. But there's even more than this. This is just kind of the three kind of most popular ones. So talking to your tax accountant, your mortgage professional, to make sure you're accessing everything you're entitled to is so important.
Yeah, I would like to remind our listeners and viewers over here, as April just mentioned, there are so many other provincial and municipal programs also that are tied up to renovations and other stuff for legal basements and other incentive programs are happening. And we are only talking about these three, but not limiting to other programs. And if time allows us, we will probably, Kim and myself will probably jump into some other most popular ones in future videos, definitely. Yeah. Kim, you have anything to add?
No, like I just wanted to say thank you again, April. Like for all of our listeners, both of our contacts, like all of our contacts will be listed on whatever platform you're watching on, Spotify, YouTube, or like I said, you might catch us on LinkedIn or Facebook. But April's contact will be on there. So as myself and Preet, as always, thank you again, and we'll catch you guys on the next one.
Awesome.
Thank you, April.